Hi, everyone. Everyone that's joined in on our webinar today. This is STOKR's second webinar, and today we will be discussing the Bitcoin halving that happened just several hours ago. On our panel list, we have co-founders of STOKR, Arnab Naskar and Tobias Saito, and myself, Jaman Gay. I am a content writer. We will get into the means, the impact of what this halving is going to do to the cryptocurrency market, the economy, how this ties into our current situation with the weird difficulties we're having with COVID-19, and a little bit more. So glad to have you guys with us. I'd like to kick off our first topic, which is relevance. What does this exactly have to do with where we are sitting now? How is this halving going to affect the long run, short term? As we've had two halvings in the past. This will be our third one, and we are in a very different place than we were in 2016 or 2012. And I'd like to kick off that topic. Tobias, I'd like to start with you. What are your thoughts on that?
All right. Hi everybody. Welcome to our second webinar. What I think about like this topic is that it is very interesting that this halving came right now in a time of crisis in the middle of not seen economic crisis, which is a result of an evil virus we have on this planet. And when you think about what happened right now after the halving, nothing actually, right? So it's like it was like on the price of the Bitcoin was a non-event. In my opinion, it shows like that it really works. Like this idea of halving as a mechanism to control inflation, and maybe like finally to control like also like the prices of Bitcoin. And in contrary to that, when you think about it like yesterday, and also like when you think about like what has been embedded like in the last block by the mining pool when they did it last evening, they put actually a reference to 2008, what the Fed has done at that time, like a massive quantitative easing. And they said, okay, now the New York Times had like a headline, and the quantitative easing is even topping actually this. And this is like incredible and super interesting because it's super relevant in this sense. And I think today it's even more shocking when you see like today, like the Fed has started like to buy corporate bonds in the form of ETFs, blowing up even more like their balance sheet. And this is like it was like the idea of creating Bitcoin, and also like implementing like this halving mechanism. It was a reaction to extensive monetary policy by the Fed, but by all central banks in terms of crisis. And I think what we see right now is we see money flying into the markets, flying into maybe companies even which cannot sustain post-COVID, and then we will see like zombie companies, and we have like a zombie market. And on the other hand, I think we have Bitcoin, and I think it's very interesting, and I think Bitcoin can be like an antipode to this development, and shows that like its price is not correlated actually to what's happening in the legacy financial markets.
Arnav, did you want to?
I think Jivan got stuck somewhere, but
no.
Yes, I can just quickly give.
Maybe you could not hear. Probably it's fine.
Yeah, so I think one interesting aspect of halving is it is actually, so what halving is actually doing is reducing the supply over the period, right? And yesterday, somewhere at around 8 p.m. CET, when we saw the halving event happen, it's a very, I would say it's a celebration for the entire Bitcoin community. And this is actually my second halving. First halving, which I have seen, was much more from an amateur perspective. I didn't had that much feeling, but the second time I really felt like it's a New Year party, you know, sitting at the home, watching the WCN live telecast of this Bitcoin halving party where we had Adam back, named and few other people. It's a very interesting moment where we are in the entire Bitcoin. If you see this, I can call it a revolution, right? It started in at the same time of financial crisis in 2008-9 period, right? And now we are again in a second financial crisis, and this third halving is happening, and it's a very interesting, and that makes it very relevant. Like, I don't think Satoshi was an astrologer, right? But somewhere his calculation matched out, and the third halving somewhere matched the same financial crisis in which the Bitcoin came in. Quite a coincidence, but yeah, nobody knows.
He
Maybe
has his own crystal ball, maybe.
Yes, maybe he has a crystal ball. You just don't know.
Yeah.
Yes.
Really quick, I actually just wanted to lead into the next topic, but in order to do that, I wanted to sort of break it down exactly what the halving is for anyone that may not exactly know how it works mechanically. So every 4 years, or every 210,000 blocks that are verified by miners, the Bitcoin network halves the reward that miners get for their work in mining, or essentially verifying each of the blocks that are put on the continuous blockchain. In 2008, when Bitcoin first came out, the reward was 50 Bitcoin, which in today's money would be just under $500,000. But back then it was Bitcoin was worth pennies. So as it was just starting out, you know, it was a little bit easier to get into the mining business, I suppose, if you could put it that way. And so the next 4 years, in 2012, we had the first halving, which was it would make it 25 Bitcoin reward. And at that point, it was reaching the $2,000 mark of worth per Bitcoin. So it was definitely getting profitable for people who were mining themselves. And in 2016, we had the next one, of course, and then it dropped to 12.5. That's what we were at before last night. And we're now at 6.25. And it's really interesting to see it happen this way, because I remember where I was in 2008 when the housing market crashed. I was in Washington, D.C. at the time, my last year in high school, and I'd had a couple friends who actually had a mining setup in his basement, and it was really, I had no idea what was happening. I didn't really know much about it. Bitcoin had just started to surface on the internet, and I heard people talking about it. I wasn't exactly sure what it was, but obviously now that would have been a pretty sound investment if I were to, if I had the foresight back then. But I say all that to lead into the next topic, which is investment itself. There are a lot of people that come from, in this generation, we've already seen what a financial crisis kind of looks like, not to this scale quite yet, but we saw it with 2008. It didn't affect as many people worldwide as current 2020 situation, but I think that people are becoming even more risk averse now, because we've been through something like this before. A lot of assets were lost in the past with the past crisis, and it took a while for us to bounce back. It took a while for a lot of countries to bounce back. But now we are in a situation where the situation is similar, but the scope is just so much larger. So I wanted to bring to light what do we think about people who are worried about investing now, especially in something like cryptocurrency, where it's not entirely proven to a lot of people yet. We obviously disagree with that. I think that it's very well proven. But do you think, is there something that we can say or explain that would make people a little bit more comfortable or understand the mentality behind investing nowadays, even in the midst of a crisis? Anyone?
Yes, you want to go first? Oh.
Sure, yeah. Or no, you can start, sorry.
Yes, I think like coming to this point, like Bitcoin, if you see that the entire idea of Bitcoin started as a peer-to-peer cash element, right? And this white paper, if you read the first page of the Satoshi Nakamoto's white paper, that talks about not only the tech but also the social economic impact of that. And one of the biggest value proposition of that was peer-to-peer cash. But we humans are unique, right? And we changed the usage of the peer-to-peer cash into a store of value, and we started using it as a gold. And now in 2020, we see it's much more, I would say, a store of value than as a means of payment. But definitely the means of payment are increasing, and over the period, we have this Lightning and other technological features that is coming on top of Bitcoin. This will make Bitcoin much more being used as a peer-to-peer cash. But saying so, I think the relevancy of Bitcoin and where we are coming when we're talking about the investment is it's very much right now when we're talking about alternative investments. Bitcoin is first non-sovereign currency in this proportion or in this scale, which nobody can deny, right? Now, a lot of fund managers, asset managers from the traditional market are keeping Bitcoin as, or considering Bitcoin as an asset class under their fund obligations on those kind of things. This brings to the fact that people started acknowledging Bitcoin as a store of value as well as a means of payment. And I see this halving event will be a very interesting factor, because what you're technically doing is reducing the incentive for the miners to halve. But you see the miners are still working. You see, because of the prices, you see the miners participation other. Over the coming weeks and months, we will see how much it is true. Are the miners getting demotivated leaving the market, or they are getting much motivated? But on the overall scale, we can see the market is quite bullish. The market is growing. The volume of Bitcoin, if you see on a historical level, is increasing. And I think that gives quite some interesting figure that if the volumes are increasing, that means the market is adopting it.
Yeah, I think absolutely. And to complete this, I think when you think about Bitcoin as a store of value versus like a mean of payment, I think that what Arnab pointed out, that it has like even these two functions. And when it comes to investment, the most important thing about an investment is that you have like a possibility to diversify actually your portfolio. And it's a myth that there are risky assets and non-risky assets. Every asset class, and that's what you also said, Raman, when you have seen like the financial crisis 2008, suddenly you have seen like the housing prices were going tremendously down, and the only thing what you heard actually the whole time is like housing prices are stable. It's the best investment you can do, and there's nothing better to have than real estate. And it showed it's actually not true. Mm-hmm. And in this sense, I think it's more like a general task for all of us, like to think about what is an investment. It doesn't mean that you go into one asset, like buying only Bitcoin maybe, but have like some other investments on the side, but also not buying like one house, right? And not have any Bitcoin. So I think in this sense, Bitcoin should be definitely more like a supplement to an existing investment plan, and that makes it interesting. And when we think about it from a risk perspective, the correlation in the moment is not exactly with the stock markets, but it might be also like the ultimate story of easing is going, all the money flowing into the Bitcoin and the stock markets. But I think what will be interesting to see when we have really like now a tremendous crisis, and maybe like the central banks overdo it, that we create a bubble which will ultimately burst, whether Bitcoin, with its stable mechanism implemented also by this halving mechanism, will keep up and will turn out to be like a store of value which is reliable in these hard times.
I was wondering towards the end there, Tobias, when you mentioned what the central banks are doing, they're definitely doing as much as they can to inject as much money as possible into their economies to make sure that economy markets don't completely crash and come to a complete grinding halt. I was wondering, is cryptocurrency, could you see, this is more of a futuristic question, but how could you see something like Bitcoin or cryptocurrency being an ease, or being a crutch to the monetary easing or the quantitative easing that we are seeing happen with the stimulus checks and the bailouts and all of that? Is crypto a way out of that? Is it not? How can we navigate that now that we have something as dynamic as Bitcoin, where its value is very, very high, but we are still moving towards something, a world where Bitcoin can be used in the grocery store? So I was wondering if you could just shed some light on that.
I think what you mentioned, like the Bitcoin price is high. Is it high, right? We don't know. Maybe it's only high when it is 2 million. We don't know what is like the exact
That's a good point.
price of Bitcoin. Nor we can say whether it's low or high at all, because we don't know how like the price will be determined. The same goes also like for some other markets, but because in the moment when you create so much money, as you mentioned, via quantitative easing, the prices are detached from reality. That's what I mentioned also in the beginning. Like you have like more like a zombie market than a real market, and a zombie economy maybe like later on when like the Fed is continuing buying corporate bonds. So definitely, I think it can be like an asset which is which turns out to be like a hedge to the current quantitative easing, and I think that would be like the main use case for the foreseeable future of Bitcoin. Despite of, I think, like I would like to ask this question quickly to Arnab. Maybe like also like has some functions in the remittance services, benefiting like people who may be even more affected now economically by the crisis, and being able to use Bitcoin in different ways. And it's maybe not only like an asset, maybe it's also like a mean of payment.
Yes, I think this is something, it's quite interesting actually. Like if you see that Bitcoin started as a means of payment, as I said, and it became the store of value. And it's also very economic wise, it's an experiment also, because Bitcoin is a deflationary currency, right? It is not an inflationary currency as we know euro or dollar. So there's a very interesting term that Bitcoin community uses. It's called quantitative hardening, right? Instead of quantitative easing, that means Bitcoin reduces the supply over the period of time instead of printing the money press and bringing the money in the market. It's an experiment, right? It's an experiment. And if I see also Ethereum on one side, it's an inflationary currency. One side you have the Bitcoin, that's the deflationary currency. Let's see which has this market in the future. But definitely Bitcoin has received its approval on its economic model with the price that we are seeing, right? And as Tobias also mentioned, and also Jivan on this point, like Bitcoin's price, we don't know, it's relative. What is higher, it's relative. Like if the Bitcoin's price is, let's say 50,000, then you say 20,000 price was still a low. But sitting on 8,000 price benchmark, we consider 10,000 is a higher benchmark. So it's all relative, right? Life is relative by itself, right? And that's why
Yes.
Bitcoin's price is relative over here. And that's what, as Tobias you mentioned, right? What is safe asset or safe investment? It's all relative, right? A safe investment in real estate in Gaza may not be a safe investment at all in real estate in Gaza, right?
Good point.
So that means real estate investment in every country is not the same. So it's all relative. It's the relative based on the time, based on the economy where we are. Maybe in today's era, Bitcoin kind of digital non-sovereign currency is very much important. Where I had a very interesting story to share here, and this is I shared with Tobias in the past. I was in Luxembourg last Christmas, and in the Christmas market. So, as those who are Europeans in this call, they know the European Christmas market are a place to really enjoy and have fun. And I was in Luxembourg one evening when I was spending time alone, and I went to the Christmas market of Luxembourg. And there was one guy who was, playing a trumpet, and he was asking for money, and he had a small cardboard where it's written "Accept Bitcoin." And he was standing just next to a bank ATM, one of the most well-known bank in Luxembourg. I don't want to name, but that one thing clicked that point of time, that that guy may have taken just a matter of second to create that account without any KYC, without any permission, without any approval. If that guy would have wanted, to get a banking account with that bank, it would have, taken so much weeks with so many documents, KYC formalities, everything. And this is the core element of Bitcoin, that you don't require a permission. That's actually the core element of Web 3.0. You don't require a permission to enter into an ecosystem. And that makes it inclusive. And that's actually the main opportunity of Bitcoin. And that makes it not only interesting as a store of value or means of payment, but also how they can bridge the gap. I'm not talking about this element of banking the bankless or some other feature, but this element of permissionless. You don't require permission to earn. You don't require permission to spend, right? And the only activity you need to know is just to take an action, go to the page and create a Bitcoin account, all for free. And this we have not seen in the finance world for a long time. This is somewhere it's changing. Somewhere it's changing the mind of banks is how can you make an account free, and how can you give an account without charging anything. You can have a Bitcoin account without paying any fee to the the company that is doing. And this is very unique, and this will change the way we perceive finance, we perceive how the money works, how the money market works. And that's fascinating.
Yeah, it's interesting. The Luxembourg story is interesting. You notice that in TV now, you can hear people talking about, you can pay me in Bitcoin, or
Yes.
it's the way that it's definitely changing the way we think about.
And maybe in the COVID way, you don't want to touch the currency, right? So
Right,
anyway, you
exactly.
use
Yeah.
QR code-based payments in the coming days, because I don't see the COVID crisis is going to be over in next few weeks, right? It will be with us. A lot of governments are telling, so digital payments will be a thing.
Mm-hmm.
And Bitcoin, you can send billions of money, from China or to US, and you pay cents. Imagine doing it with a bank, how much money will pay and how much days it will take. With Bitcoin, it will be in cents.
We could be heading towards a future where salaries are paid in Bitcoin, right?
Yes.
Say, oh no,
I know a lot of crypto companies are paying salaries in cryptos. Yeah.
right. Yeah. No, my job pays 3 Bitcoin a year.
Yes, somebody got it at that point of time when the Bitcoin was giving 50 Bitcoin for the minings, right? And when the Bitcoin price was 700, somebody was getting 1 Bitcoin or 3 Bitcoins at one point of time. And imagine this value currently.
Yeah.
Yeah, that's when you also mention the relativity of Bitcoin. I do remember 2016, I think, is when the price had a really wild swing. It hit like 20,000 per Bitcoin. And I remember reading that. I just hadn't been following up on it. And then it just sort of popped up on my news feed.
Mm-hmm.
It was like, whoa, wasn't it just like 6,000 last year? How is it 20,000 now? So you're definitely the relativity of how the prices, to me, it definitely sounds like 10,000 for Bitcoin is a lot, but in 2 or 3 years, 10,000 could be a very, very that could be a bottom mark for Bitcoin. We don't know. So you're right about that. Okay, I guess I wanted to move into another topic, which is the mining itself. So I explained a little bit about how the mining process works, but this is a topic that amongst my research is a little interesting because I see some opposing or differing views on this. Bitcoin, when the Bitcoin rewards have themselves, you would think that there would be a lesser return on investment for the miners. So if you're spending all this money with all this equipment and you are now trying to mine for something that's, you're mining for half the reward now, I'm under the impression that I don't think miners will go away completely, but I think that it will be very tough for some of the miners who are not giant pools or giant companies who dedicate farms of servers to mining specifically. I'm under the impression that this will leave only big players in the mining field. So I'm wondering, this is an open question. Do you think that miners, the small miners, will this have a positive or negative effect on the miners as a whole? Maybe not necessarily, or even the big companies. It's possible big companies could go out of business due to unforeseen reasons in the next few decades. But I'm wondering if you guys had any thoughts on that, on the effect on the miners.
Yes, I think there are like two schools of thoughts here, right? One school of thoughts, one school of people, I can say, says yes, the miners will face tough times in the coming days. The other says no, it will not make that much of a change. But we must appreciate on the fact that miners' salary got reduced suddenly, right? From one night to the other night, people are celebrating, but the miners' revenue generation capacity got reduced. Now, if they have to earn at the same level, either the first one, they have to be way efficient. That means they require better equipments. The second, they require favorable electricity and other natural resources that they require, land, whatever comes on this part. So they have to be efficient. And the third important element is they have to get the liquidity in order, like investments must come to the miners, right? The miners also have to be able to raise money in order to finance those changes. And this is very crucial because to really be the efficient for a miner, the miner has to really invest heavily. So one way I don't see that, and this is very interesting for how Satoshi Nakamoto may have thought. I'm not sure that that was the main reason or the main case, but that was very interesting that he made the structure in such a way that efficiency will prevail in the market. If you are not an efficient miner, you will be taken out of the market by the principle of economics by itself, that you cannot earn more and you will leave. The efficient miner will always supersede a non-efficient miner. That means even if you are a new person coming into the market, and if you are efficient, you have a say and you have a chance to grow. And as we see more and more, this is very interesting things we saw in the last few years, that a lot of sovereign countries like governments are, coming into the mining business and looking into the mining business. They're holding Bitcoins and they're getting interested in the mining business. And government can be an efficient miner if provided because they have connection to their power plants, they have a connection to the natural resources, and they definitely have the resources to buy higher equipments and have research and facilities to develop that or to import that. And this gives that maybe in the future, the miners will not only be the private institutions or companies, but maybe also sovereign states. Tobias, what do you think about if a country like Luxembourg have their own mining pool?
I'm actually a little bit reserved on this idea that like the states provide mining for Bitcoin, but it's a fun idea. Like the ultimate question will be like, then do we lose like this sovereignty, the decentralized elements when suddenly the mining or the Bitcoin will be partly controlled by states, but then the competition will be on state level rather than on the private level. But what I would like to add here is when you think about mining, is like the costs perspective, right? Like now after the halving, everything is double as expensive when you mine because the reward halved. But on the other hand, I think also like right now in the COVID crisis, that's why it's also interesting. The energy costs go generally down because like the consumption of energy is much less than before the crisis, which might also be like a possibility right now to keep going. And over time, I totally agree with Arnab that efficiency will prevail, and there will be new rigs out there which work with less electricity to make mining possible. But in the end, when you look at where we are right now, what the kind of block sizes and how many Bitcoins have been out there, Jamal, I don't know whether you know like how many are there and how many still are outstanding. It's we are like almost like at the end, even if it takes like 100 years longer, according
right,
to
we're at 18 million and change.
Yeah, of 21 million, right? So I think maybe it's even not so relevant how fast and houses will go, because we are almost like at the end of the distribution cycle, right? But more interesting will be like,
right.
Yeah, and then the transactions.
People also lost a lot of Bitcoins to BS, right?
Yes.
so out of 17 million, a lot of million, like maybe a few 100,000 are gone.
Yes, and I think I think I read it also that to your further question about the price, that maybe like a lot of miners who have old equipment who cannot keep up with this reward anymore, like they need to get rid of their Bitcoins and they have to sell them on the market. But as we said in the beginning, it was a non-event so far on the price, so maybe all these speculations were finally not true, right?
Yes, but it's also like you can see, I will not say it's a non-event, right? For me, it's an event because people didn't dump it, right? If I would have seen people dumping it, so that makes it an event, like people did not sell it.
Yeah, or it's an event in this sense, like it proves that actually
people
works.
Trust. Yeah.
Yes, and
it's
that's
all about
the main
acceptance,
message.
Right?
Yes.
Yes.
And he wanted to build like something, a trustless mechanism, and people now starting to trust it. I think that's a big achievement, and that's why it's a big day for the crypto world.
Yes. And also, I think like I would like to add also on the STOKR side, just as a business lead, I can add that on STOKR you can invest with Bitcoin, right? And this is something you're investing in normal traditional shares in Bitcoin. That's very unique, right? Earlier you could have only invested in normal fiat currencies, but with the new age platforms like STOKR, you can invest not only with Bitcoin but Tether. But Bitcoin is very relevant here, so it became a peer-to-peer cash, so you can invest it and you can use it also as a means of payment.
Absolutely.
Without the jumping through the hoops of needing a broker or the know-how of trying to navigate through the market, it's definitely a
yes, you can buy on your own. For the Bitcoin, you don't require a bank account. You don't require to do a KYC.
Bank fees.
Yes, you can go to peer-to-peer. You can like buying places on this local Bitcoin.de or something like that. You can also go to an exchange, whatever you feel comfortable.
Great. And I think there's one small aspect that I just wanted to add on the mining issue, because I remember we were speaking about how the mining hardware industry has definitely also taken a hit. So it's just interesting to see that with less demand, it's going to make supply to take a hit, right? And so that's another aspect to the whole thing that adds a little bit of complexity to it. And
Yeah, the mining pool industry is also having its own challenges right now. If we see in 2017-18, there was a huge, like I would say, the mining pool industry at the same time when the CBD industry was going up, the mining pool industry was also at a very high scale. And right now, I think in 2020, they are facing their own problems and own issues. There is a requirement of efficiency, and I think they are striving for it and they're going for it. But yes, mining industry also need to come up with new infrastructure, new devices, or new hardwares that can be much more efficient. This is very much required. Yeah.
okay, I think that we have covered a lot of ground today. Is there any more ending thoughts that we want to adjourn on, or anything more we want to say? Final words.
Check out STOKR.
There it is.
You can put it here. Yes, as Anna mentioned, it's also possible to invest via Bitcoin, and we make also use of this great technology. And I think it's worth check it out what we offer.
I think one thing I would like to add is the next 4 years will be quite interesting, and STOKR is committed for the Bitcoin infrastructure. And now that is the reason we have integrated Liquid, which is a side chain of Bitcoin. So we do not only support Ethereum, but we are also very much heavily invested in the Bitcoin infrastructure and the blockchain is one of our partner.
All right.
So yeah.
Great.
Looking forward to the next 4 years.
Great.
Yes.
Yeah.
Let's look forward.
Next 4 years, Bitcoin will be at the reward will be at 3.125. So
all right,
we'll see what happens.
Let's have a session at that time. Cannot wait.
Yeah.
Just